very tight credit market. So liquidity is everything bankers talk about today, and nobody seems to be very liquid. What does that mean to you? You've got an inflationary environment, you got high interest rates. We haven't seen unemployment spike yet at this point in time, but all of that flashes of a recession coming our way probably in the latter half of this year if it already hasn't started. And people are going to have just less disposable income to spend. When these times happen, they get cautious. Their future, that's where they want to focus their practice and they want to grow it. I start off with the practices, let's just look at your patient and take it from your patient's perspective. What are you asking them to do? It's a large purchase, $25,000, $30,000 for an arch or whatever the price points are is a major expenditure for all consumers.
Episode of the Full Arch Advantage podcast. I'm your host, Gary Bird. I am the founder of SMC National, where we help you create, convert, and close more full arch cases. And today I have a special guest, Dave, who's the CEO of Proceed Finance. They are the leaders in the full arch space when it comes to financing, and you're going to want to listen to today because he's going to dive into what's going on in the market around financing and how to make sure that you get the right kinds of patients, the right kinds of financing, and he shares some insight on the differences between different kind of financing companies out there that honestly, some work great for full arch and others not as much. So you're going to want to understand that. If you're going to want to grow, stay tuned. All right, Dave. So I'm excited to talk about this topic because it's on everybody's mind where we're seeing banks fail across the United States. And we also, another thing that we have happening at the same time is you have the economy seems like it's slowing down and we're either on the cusp of something bigger, some kind of bigger recession or something's going on there and everybody kind of feels it, but nothing's happened yet. And then on the other hand, we also have 10,000 baby boomers who are retiring every single day and they have the finances to afford treatment and those kind of things. And so we have these two things merging together. And I know with your experience with Proceed, you've been in the finance world for a long time. What are you seeing in these markets and what can we kind of make of it? What should we be thinking as we start to dive into what's going on in the world?
Sure. Great question. March was an unprecedented month in the banking world. We haven't seen any sort of disruption like that since the Great Recession back in the 08, 09. And what that all caused. A lot of uncertainty in the marketplace. I mean, it all starts if you go back on a macro level. We come out of the pandemic, lots of liquidity in the marketplace. Banks, in effect, were being able to get deposits at very little to zero cost, a lot of money available. And, the unintended consequence was inflation started because there was too much demand for the products that were available. So, everybody, at least in the beginning, thought it was transitory, but got very serious. The inflationary rates, we haven't seen that since the 80s, where we hit almost 9%. So the Fed had to react. So all of a sudden, we see the most aggressive interest rate increases since the 80s, actually, where prime rate a year ago was 3.25. It's now 8. So, that multiple over 2.5 times. And lenders have to deal with that. So lots of things happened. Bank balance sheets weakened because, the bonds and their investments that they held were worth a lot less money with interest rates when, the value of bonds go down as interest rates go up. And they had a lot of unrealized losses, coupled with a lot of money was being withdrawn out of the system just because people were spending it. Plus, people were moving money to more higher yield, attractive investments. U.S. Treasuries were, 4%. You had all sorts of things. Banks are historically very slow at raising their rates to their depositors. So, you had all of this kind of coming to head, and we had a major liquidity crisis. Quote, the classic bank run happened in March with two large banks publicly traded and one voluntarily liquidated, but that scared everybody. There's like $8 billion of uninsured deposits in our banking system, and there's not that much liquidity to handle those kind of withdrawals. Everybody started worrying about, if they their deposits were uninsured. They needed to move them, so all of this activity happened. But what's today, all of that means is we have a very tight credit market. So liquidity is everything bankers talk about today, and nobody seems to be very liquid. So there's not a lot of new money to loan and to put into various programs, and you're going to see banks just be completely different than they used to be in terms of making credit available. They are tightening. So what does that mean to you? You've got an inflationary environment, you got high interest rates. We haven't seen unemployment spike yet at this point in time, but all of that flashes of a recession coming our way probably in the latter half of this year if it already hasn't started. And people are going to have just less disposable income to spend. And when these times happen, they get cautious, and they're just they don't make buying decisions very easily. So be prepared to struggle with some of that. But what we're trying to do is we have a great company, and we perform. We've got a great product, a great producing portfolio. And so one of the things when I survey my providers is how are we going to react to this? And I get pretty much the same answer from all of them is don't tighten credit, make it available to our patients so the financing's in place so they can move forward with cases. If we have to raise pricing, do that, but don't tighten. So we are not doing that, and that's not in our plan to be able to make credit offers available to their patients in the same manner that we've always done. So that's kind of what we're handling it. But in terms of what I see a lot of practices doing is the market is so huge with what our providers do and what your the whole industry is. You just have to refocus in terms of your marketing strategies to attract quality candidates that have money if they need and want the treatment, which is life changing. And the liquidity is available. It's likely, depending, it's recession proof. They're not going to hold back. There's enough people in the universe of all the patients that will want to go forward, and you just continue to do that, and we'll make the credit available for patients to go forward when they need financing plans to say yes. So, but it's scary. I mean, I think all of this adds up. It's not a positive, and these things happen. I've been through 3 major cycles of recessions in my career. It always works out. It will pass, but you just got to go forward. A lot of providers that really want to grow view this as an opportunity to take market share, and they're very good at doing that, and that's sort of what we're doing as well. And we like, hey, we're in business for the long term. We're going to do what we've always done, and we're going to take care of our providers. And we're very strong in a liquidity position. We've got lots of money to lend, and we're going to make it available to providers and their patients so they can go forward with life-changing treatment.
Awesome. So sorry to disrupt the show, but I just have a quick commercial for you. We are going to be hosting 4 events over the next 12 months, and we're doing a little bit of everything for everybody. We have something around Full Arch. We have something for those that manage marketing. We have something for those that want to scale their practice at Dykema. And then also we have something next year that's for everybody in your practice to learn business skills and to really maximize the opportunities for you to grow your offices. You're not going to want to miss these. Visit smcnational.com/events. These are going to be the premier events that you're going to want to go to make sure that you're getting the tactical skills that you need to continue to grow the way that you want, because at SMC, we're all about growing. What are you seeing right now as far as practices that are wanting to grow? What's the one thing that you see the common thread that they're really nailing to make sure that they're growing properly?
Sure, especially like in the Full Arch arena.
Full
where
arch.
Exactly where that's their future. That's where they want to focus their practice, and they want to grow it. I start off with a practice is let's just look at your patient and take it from your patient's perspective. What are you asking them to do? It's a large purchase. $25,000, $30,000 for an arch or whatever the price points are is a major expenditure for all consumers.
Yes.
And you've got to deal with, okay, what are their priorities in their life? Because, you're competing now with other things that they have that they want to do as well when you start talking about large purchases. So what we learned early on was the key to success is you have to make it affordable for people to say yes. You'll have your X% of the people that can pay cash or otherwise have resources to pay for the procedure without having to take on debt. But that's a relatively small percentage as compared to the total market. The majority of the market, they want to pay, they just can't pay now and they need help. So you have to realize that and make something that they feel comfortable with to go forward. We learned that, it's like this. If we can make it look like a car payment and not a house payment, it's just universal. People will
You
say,
should put that
yeah,
on a T-shirt. Car
yeah,
payments, not house payments. That's the recipe to success.
yeah. I mean, it's so simple. I interviewed like dozens of treatment coordinators when I formed this company on trying to build a product that was specific for this industry. And, what do you need to be successful? And, in a perfect world, what would be the financing product that would be the difference maker for you that you could offer your patients? So that's how we built the product that we offer and the company. But it was so simple. I heard it from almost all of them was they make it look like a car payment and not a house payment, and we can convert those cases, and people will say yes. So we studied that, and there's some psychology behind that where people, if you really survey people, almost everyone at some point in their life has had a car payment. They handled it, they managed it, they felt comfortable with it, and they were willing to do it again.
Yeah.
And they could manage that because that's something they could, fit into their finances in their life without disrupting anything else. A second mortgage or another house payment, nobody's going
Not
to
so
want
much.
that. So
Yeah.
the sweet spot probably is if the payment looks like it's more than probably 800 or more, they're not going to go forward in general. If it's between 6 and 800, that's kind of the outer edge. But if you can get it below that for these treatment plans, especially like in the anywhere to the $400 to $500 range, people get very comfortable and they'll say yes. So that's what we try to do. And how do you do that in the finance world? Well, you've got to have lower interest rates and stretch the term. So that's why we're comfortable going and we offer the 10-year term in our company. So I'll finance these procedures over 10 years. And then when you mix that up with, we risk rate our interest rates, but with a lower rate, that's where you get that low payment, where people get comfortable and, people want that product. And, we're the only ones out there that, take that risk where we'll loan money unsecured for 10 years and, try to subsidize that with lower rates to create that affordability. So my point on how do you grow your practice is you've got to have patient financing regardless. I mean, it's no longer a want, it's a need.
Yeah.
You're,
One thing that I had a conversation, and this really hit me hard. I was talking with somebody, and they said they were a coach, and they said, what happens to these treatment coordinators is they have these financial companies that they use, and the vast majority of the people get declined. And so what ends up happening is they get burnt a couple times, and then they kind of get cold feet because they build these relationships with these people through this process if they're doing it correctly, right? And then they have to tell them like, oh, I'm sorry, you don't qualify because I'm using this, financial option that just doesn't work for full arch, and they get declined or they get this huge payment that people really aren't happy with. How do you guys kind of differentiate yourself from the other lenders in that area to make sure that one, you're getting yeses to the right people, but also that you're getting the car payment instead of the housing payment?
Sure. To address that, we built this product for high-end dentistry and implantology. I had done a consulting project for Clear Choice after I retired and was bored. They had lost two of their major lenders for their patient financing facility, and I was brought in to try to figure out, okay, what are their options? How do they solve this? How do they make sure they're in a position this doesn't happen to them again? And so, that was kind of the basis for me to get the idea to form this company, to create something that I build from the ground up for the industry versus, hey, here's a banking product. This is what I got. You got to make it work in your practice or your business model, which is what the traditional products, were and still are today. So, that's what we tried to accomplish now. What we pride ourselves in is, approval rates are an interesting concept. Everybody says, well, hey, we've got a high approval rate. Well, be leery of that because I always try to train. It's all about quality approvals and offering enough credit to put people in play for a large case. Okay. So, I can say I have a 90% approval rate, but I give everybody $500. That doesn't do you any good.
Yeah.
Okay. So
that's a good point.
What we pride ourselves in is that we usually recommend that providers, when they have a patient that wants to apply for a financing option, is to apply for the full amount of the treatment plan. Because when they do that, some interesting things happen is, one, if they get approved for the full amount and we're agnostic on terms of down payment, you just gave them an option they didn't think they had. They don't have to put any money, towards the procedure today to go forward. So that conversion is easy. That's probably the easiest closed treatment coordinators tell me is when, you can quote do the sign and drive option. So, see if that's available to people. And what we'll pride ourselves on is when somebody asks for amount of credit, we hit that ask over 88% of the time. So, it's a quality approval. Our average funded loan is almost 24,000, and our average approval when we approve is over 40. So these are offers that will put people in play for a large case and a full arch or even a double arch. We go up to $75,000, and we approve a lot of cases even at that level. But it's all about quality approvals. And then what I wanted to do to meet the market where there's challenging credit and people, are not going to get large offers from banks or other finance companies, is to find a lender that's willing to take that risk and offer large amounts of credit where they can put people in play for at least part of a large case where, it may not be the full treatment plan that they need, but at least they can get started and then work their way out of, their, challenging credit. When I hear it all the time too from treatment coordinators, hey, the hardest thing we have to do is tell somebody no when they need treatment because they didn't get approved. Well, my answer to that is, they'll have a chance on our platform, and that if that happens and they are denied, always ask, well, is there a loved one or somebody else that would help you with this, that knows you need this procedure and is willing to help with credit where they have good credit, and they'll be approved, and we'll work out, who pays for what. But in any event, you can get going forward with that. And then the second thing we always say is, look, it doesn't, managing credit and credit scores, it's something that the provider didn't do, that somebody has a poor credit score. It isn't something that I did. It's something that they did. So there's always hope to work your way. You can get approved, and you can increase your credit scores and the likelihood of approval if you do some simple things. Okay, and we'll take it through that. So there's hope. This isn't, this is a temporary issue. That in 6 months, if you do some of the things that we'll recommend you do if you have challenging or credit that's not approvable, to get where you are in a position where you will get approved, so you can move forward, in a period of time. So, you always try to keep the positive attitude, and there's always a solution. You just have to go after it. If today they can't go forward, well, in 3 to 6 months, if they do the things and with their credit that they need to do to be responsible and improve their scores, then they could be approved in a relatively short period of time.
That's great. Awesome. Well, this has been really, really helpful. I know this is going to help people kind of think through, especially I love that takeaway of just because people have high qualifying scores doesn't mean that they're qualifying for the right amount. And that's crucial to understand. Yeah. And your insight on the market was spot on. So I really appreciate you coming on and sharing this. If someone wants to reach out to you guys and learn more about what you guys do and how they can help get more full arch cases with your guys' financing product, how can they get in touch with you guys?
Yeah, great. It's very easy. We have a website. It's www.proceedfinance.com. It's a great site. It's got everything you'll ever want to know on there. How to get a hold of us. You can contact us via email or through our contact us strategy. However, we pride ourselves in wanting to be a provider's partner, not a vendor. So we want to get to know you and try to help you and give you best practice type tips and, be more of a consultant to help you grow and be successful. So we want to develop those relationships. But I will give you a number that they can call if they want to get started. And one of our reps will make sure they get put in, routed to the right person that, will start that relationship. And, if they have questions, if they want to go through some sort of a Q&A or deck or anything just to understand what we do and how we do it, we share all that and we'll book a consult to get people onboarded. But it's relatively easy to get started with us. We have to have them sign a service agreement. We need their banking information. Obviously, we're going to be sending them money and just those types of administrative things. And we can get through that process really quickly. The 800 number is, I'm going to get it here. I don't have it right at hand.
What's your guys' website?
It's www.proceedfinance.com.
Awesome. Perfect.
Pretty easy to remember.
Yep. And I see the sign right behind you. So that's perfect. People can find the number on there. I really appreciate you coming on. This has been a real pleasure and you did a great job.
All right. Well, I appreciate being your guest. Thank you for having me. And, let's hope your providers are going to be very successful and we'll help them, get to that and meet their goals.
Thanks so much, Dave.
All right. Thanks, Gary.